The Online Student.
Designed for May 2026 session, IB Economics, Standard Level and Higher Level, Paper 2.
Level 1. A vague or partial definition of current account deficit. The idea that imports are more than exports without further explanation. 1 mark. Level 2. A clear and accurate definition of current account deficit. An explanation that the current account balance, a record of a country's net exports, net income from abroad, and net current transfers over a period of time, is negative. It shows the net outflow of funds from the country to the rest of the world. 2 marks.
Level 1. A partial or basic definition. For example, a measure of development. 1 mark. Level 2. A clear and accurate definition. The Human Development Index is a composite index measuring a country's achievements in 3 basic dimensions of human development: long and healthy life, life expectancy, knowledge, education, and a decent standard of living, GNI per capita PPP dollars. The HDI provides a more comprehensive measure of development than income alone. 2 marks. Information based on Table 1. GDP in 2020 equals 13.5 billion USD. GDP in 2024 equals 17.4 billion USD. GDP in 2024 minus GDP in 2020 divided by GDP in 2020 times 100. 17.4 minus 13.5 divided by 13.5 times 100 equals 28.89%. A correct numerical answer showing 28.89% without working merits 1 mark.
Values from Table 1 for 2024. Exports equals 3.4 billion USD. Imports equals 4.6 billion USD. Trade balance equals exports minus imports equals 3.4 minus 4.6 equals minus 1.2 billion USD. Statement of answer. Since the trade balance is negative 1.2 billion USD, Madagascar had a trade deficit in 2024. Award maximum of 2 marks for calculation. Award 1 mark for stating surplus or deficit.
Level 1. There is a correct diagram or an accurate written response. There is a correctly labeled AD/AS diagram with aggregate demand and short-run aggregate supply, showing a rightward shift in AD due to increased government spending. Or a basic explanation that increased government spending shifts aggregate demand right, raising real GDP and price level. 1 to 2 marks. Level 2. There is a correct diagram and an accurate written response. There is a correctly labeled AD/AS diagram with the initial equilibrium point, the short-run aggregate supply curve, and a rightward shift of the aggregate demand curve, and a new equilibrium indicated. And a clear explanation that an increase in government spending on infrastructure raises aggregate demand by increasing investment and spending in the economy, leading to higher real GDP, economic growth, and higher general price level, inflation, in the short run, reflecting demand pull inflation. 3 to 4 marks. Candidates who incorrectly label diagrams can be awarded a maximum of 3 marks. For AD/AS, the vertical axis may be average or general price level, APL, or price level. The horizontal axis may be real output, real national output, real income, real national income, real GDP, or real Y. A title is not necessary. Level 1. There is a correct diagram or accurate written response. There is a correctly labeled foreign exchange market diagram with demand and supply curves for the Malagasy ariary, showing either an increase in supply or decrease in demand for the ariary due to a widening current account deficit. Or a basic explanation that a widening current account deficit means more imports than exports, increasing supply of Malagasy ariary in the foreign exchange market, putting downward pressure on its value relative to the US dollar, depreciation. 1 to 2 marks. Level 2. There is a correct diagram and an accurate written response. There is a correctly labeled diagram showing the demand and supply of the Malagasy ariary, with a rightward shift in the supply or a leftward shift in demand, illustrating depreciation, causing a new equilibrium at a lower exchange rate, more ariary per US dollar. And a clear explanation that a widening current account deficit means greater demand for foreign currency, US dollar, relative to the Malagasy ariary to pay for imports, increasing the supply of the Malagasy ariary on the foreign exchange market. This surplus causes the depreciation of the Malagasy ariary, making imports more expensive and exports cheaper. 3 to 4 marks. Candidates who incorrectly label diagrams can be awarded a maximum of 3 marks. For an exchange rate diagram, the vertical axis may be price of the Malagasy ariary in another currency, typically USD, or other currency, typically USD, per Malagasy ariary. The horizontal axis should be quantity or quantity of Malagasy ariary. A title is not necessary. Level 1. There is a correct diagram or an accurate written response. There is a correctly labeled Lorenz curve diagram showing the line of equality and 2 Lorenz curves with some deviation away from the line of equality that can illustrate increasing income inequality. Or a basic explanation that increasing the Gini index from 0.42 to 0.44 shows income distribution becoming more unequal, indicating a larger gap between rich and poor in Madagascar. 1 to 2 marks. Level 2. There is a correct diagram and an accurate written response. A correctly labeled Lorenz curve diagram showing the line of equality and Lorenz curve 1 bowed away from the line of equality, and another Lorenz curve 2 bowed further away from Lorenz curve 1, showing an outward movement of the curve away from the line of equality. And a clear explanation that the increase in the Gini index from 0.42 to 0.44 illustrates worsening income inequality in Madagascar. The richer households have a higher share of income compared to poorer households, suffering limited access to services and higher vulnerability, as described in paragraphs 8 and 9. 3 to 4 marks. Candidates who incorrectly label diagrams can be awarded a maximum of 3 marks. For the Lorenz curve, the vertical axis should be labeled as cumulative percentage of income or wealth. The horizontal axis should be cumulative percentage of population. A title is not necessary. Level 1. There is a correct diagram or an accurate written response. There is one correctly labeled production possibility curve and another PPC showing an outward shift, or a basic explanation of how improvements in human capital and infrastructure increase productive capacity, leading to economic growth. 1 to 2 marks. Level 2. There is a correct diagram and an accurate written response. There is a correctly labeled PPC1 and another PPC2 showing an outwards or rightwards shift or growth in productive capacity, and a clear explanation that improvements in human capital, example, education, skills, and infrastructure, example, roads, energy, enhance efficiency and capacity of the economy. This shifts the PPC outward, allowing more output to be produced in both sectors, indicating long-term economic growth for Madagascar. 3 to 4 marks. Candidates who incorrectly label diagrams can be awarded a maximum of 3 marks. For the PPC diagram, the vertical axis should be capital goods and the horizontal axis should be consumer goods. Or the 2 axes may represent 2 different sectors of the economy or 2 different types of goods and services produced in the economy. A title for the diagram is not necessary. Examiners should be aware that candidates may take a different approach, which, if appropriate, should be rewarded. Command term. Discuss requires candidates to offer a considered and balanced review that includes a range of arguments, factors, or hypotheses. Opinions or conclusions should be presented clearly and supported by appropriate evidence. Responses may include explanation of the difference between economic growth, increase in real GDP, and economic development, improvements in living standards, health, education, and poverty reduction. Link between economic growth and economic development. Economic growth can provide resources for investment in social services and infrastructure that reduce poverty and inequality, but requires effective policies for inclusive benefits. Possible fiscal and structural policies to improve economic growth and development in Madagascar. Public investment in infrastructure, roads, electricity, digital connectivity, to boost productivity and attract private investment, supported by paragraph 10 and table 1. Improvements in human capital, education, skills training, and healthcare to raise labor productivity and living standards, paragraph 10. Social protection programs and targeted transfers to reduce poverty and food insecurity, especially in vulnerable rural areas, paragraphs 8 and 9. Strengthening governance and public financial management to improve efficiency and reduce corruption, making policies more effective, paragraph 10. Macroeconomic stability, controlling inflation and managing public debt to maintain investor confidence and fiscal stability, paragraphs 4 and 5. Policies supporting sectors with comparative advantage, like mining, tourism, and agriculture diversification, to drive inclusive growth, paragraph 1. Encouraging foreign direct investment by improving the business climate and institutional framework, paragraph 7, table 1. Addressing climate vulnerabilities with investments in climate-resilient agriculture and renewable energy to reduce shocks harming growth and development, paragraph 10.
Trade-offs and constraints. Balancing fiscal sustainability with the need for public spending on infrastructure and social programs. Political instability and weak institutions may hamper implementation. External shocks, such as commodity price fluctuations, affecting export earnings and inflation. Madagascar's trade relationships with major economies like the EU, China, and the US expose it to possible tariffs or changing trade preferences, which disrupt trade. Geopolitical tensions and national security concerns involving these big economies may lead to sudden restrictions or sanctions affecting Madagascar's access to key markets or foreign investment.
Overall assessment. Madagascar needs a multidimensional approach combining macroeconomic stability, structural reforms, human development investments, and social policies. Targeting SDG 1, no poverty, and SDG 10, reduced inequalities, requires inclusive growth strategies and safety nets. International support and domestic reforms will be crucial to breaking the cycle of low growth and inequality. Any reasonable discussion. Remember to like, share, comment, and subscribe.